This one stock can change early buyers' lives. This is not financial advice, but some financial advisors might say to buy as much as possible before December 13th. Company is The Real. The ticker symbol is REAL, REAL. It's a $15 stock. It's a luxury resale platform, marketplace. You can go shop for luxury consignment products. Think like Gucci, Balenciaga. They had 520 million of gross merchandise value, GMV, so amount of products sold, which is up 20% year over year through their website. That's a lot. It's not like Temu numbers in the billions or what was formerly Wish or early Amazon numbers even. But early Amazon starts to stack up. Of course, it's 20 years later, so this is a niche version. You have to find a niche if you're going to make a marketplace, 20 years after the internet began. And at the same time, there's another retailer that's doing well as well. This is Macy's. This company's further along, ticker symbol M. They have $4 billion of revenue, and notably same store sales are just a few percent, but they are up this quarter. So that's good. Retail is still chugging along. People still want to go shop in person, especially for clothing, to try clothing on. And as long as real estate gets less expensive, consumers still want to go there. Commercial real estate becomes less expensive as other type of mall inhabitants can't make it work. The big box stores like Macy's and Kohl's are getting a break on rents, and I've seen that some of the margins have improved in some of these companies. Sometimes it's just with how much they're paying for their clothes as well. So this isn't like the highest, class of clothes. We're talking Kohl's, we're talking Urban Outfitters, American Eagle, Abercrombie and Fitch, all with pretty solid quarters. Companies Macy's and The Real filling that little space of luxury consignment, which is super big. I mean, how many people want to say, hey, I got a great deal on a Gucci purse? So let's jump into what these stocks are actually doing.
This is Sam Putnam.
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 So maybe this story's uninteresting for you. I don't blame you. It's a $14 stock. Recent earnings leveling off, and you can see there's definitely demand for this stock. So it's a flag here, undoubtedly. And this thing has gone up, flagged, gone up, pulled back, gone up. So it's not going to go up forever, but it's up 150%. It's pretty crazy, but it is about pretty much a penny stock, right? I mean, until recently, this volume is significant. It's 100 million, 200 million of volume here, or more. But back here, it's really not been trading a ton. I mean, just a year ago, it was trading as little as, $10 million, $15 million a day. So there's definitely some interest. And there's been some other stocks like Open Door that have sort of paved the way for retail speculation that's liquid. There's a lot of retail speculation that's illiquid. Think about these kind of companies like CYPH, where it's trading, $2 million a day. So you don't really want to play in waters like that because, this is great, 700%, 50 cents to $3. But how does it feel also to lose, 40, 50% in a few days? Not great. So I think Real is a nice balance of daily range, 4%, and also liquidity. So here's the level. I think 14, And we can see it actually better over here. It's basically in barcoding almost. But there's enough volume. This is not totally robots trading this. If you buy it over 14.5, I think that would be considered a breakout. So give that a shot, risk 20 cents, something like that. Look for a $2 move up to 17.5. Well, 16.5 would be $2, you know, because it might have a false breakout up here. It's a pretty good opportunity though, and I don't want to oversell it. But there's enough volume here. There's, call it $15 million a day on average, something like that. So you could definitely put 150K in here with the click of a button and not worry about that 20 cents, because you can get out. You might have a little slippage. You might lose like 25 cents when you're expecting to stop out for 20 cents. So it could still work. In terms of just hopping in a stock and, you know, not touching it for a while, this is not that. I don't think because it's up here, it could definitely pull back to $10, which for a $14 stock, that's crazy. That's, you know, 15, 20%, 30% at that point. So just be aware of that. And then for Macy's, it's up a lot as well, forming this flag and strong today. So earnings reaction is not great. That's the first thing to be aware of. But if you could risk off this pre-market high of 23.6 or 24, it's a whole dollar number up here, or even this high. If you're able to buy and just take advantage of tomorrow, if it has a good day, and then it might pull back and base up here, you can risk something like 50 cents and look for a $5 move up to 27, 28, which is totally achievable. It went from 18 to 23 in just a week, just about. So that's not crazy to think it could do that again. That's Macy's. And if you look at the liquidity here, we're talking 3 million just about shares a day. Call it 5 million shares a day for a $20 stock is something like 100 million. So you can put $1 million in here with the click of a button. So those are the liquidity caps for these to not have to worry about slippage, which is important if you are trying to risk this high of, say, 23.2, where it's at right now. You buy at 23.5, that's 20 cents, right? So if you have $1 million position on a $20 stock, that's what, 50,000 shares. So 50,000 shares times 20 cents, that's just about $10,000 risk. So that's what you have to think about. 20 cents is about 1%. So all sort of checks out. If you're risking 1% of your position, that's a lot. But it's not a lot depending on your position size. So if your position size is reasonable, 10% of your account, you're trading with a $10 million account, that 1% is actually only 0.1% of your total portfolio. So that's what we're trying to do here. That's how it's achievable. And as far as what stock to get into, which is why you're watching this video, here's the deal. There's been some retail stocks that are definitely holding up, but I don't know of anyone that's holding up as well right now that hasn't already gone. I mean, ANF had 3 great days, 10-15% move, but it's already gone. This is kind of what you're looking for, though. If you can jump in here, risk the open. This is an hour-long candle, but it trades plenty of volume here over that course of an hour, of course. 5 minute, you can see it even more clearly, where it just moves away from your average right away. And, you know, you're up immediately 3%, which again, not to throw percentages and numbers, but 500K account, 50K position, 3% is 15 grand. You're up right away, risking like, I don't know, if you risk 1%, you're risking 5 grand. So what are you willing to lose is really the question. AEO also looking similar, strong the last couple of days, coming up to the breakout level. This is sort of the cheat opportunity. So could these blast right through? They could. If you look at GEV, there are stocks that are just blasting off after massive bases. And was this totally predictable at this moment? Maybe, maybe not. You know, it's a little surprising probably that it went up, came back, went up. But again, the market did that. So this is November 30th when there's a little bit of a pullback. And if you look at November 30th, there's that pullback. But the market kept going up. So this is what the market can do for us. It can hold up a stock that might otherwise, seem like it's overbought. And once you break out, you really go. So this doesn't look like a lot. That's 15% on a massively liquid stock. And we're talking $600 million a day traded. So, of course, when the volume comes in, it's too late. You can see even on the first day, the volume didn't exceed the volume about a week ago. And the whole group is not breaking out. I mean, VST looking not so great. VRT also in that power generation space, holding up, but not doing anything super interesting. Bloom Energy holding in there, but not breaking out. So this is very much a technical move. There's no big news powering this. GE Vernova does the turbines, and those are being used to power data centers. And data centers are getting built rapid fire right now. So that's what we're talking about. We're talking about Real and M. I'm just talking about stocks that have been moving recently. Light in that category as well. The data center theme is definitely blasting off, but at the same time, there's stocks like Reddit, social media stock that's just inching up. It's got a nice flag here that it broke out of, and you can see how it plays after earnings. This is the last earnings, just day after day after day, up 30% after earnings. So this one took a while after earnings to shake itself out, but once there was, an opportunity, and it did come over this earnings close, which did have high volume. It was actually selling volume, really, but seems to be holding there. So there are opportunities. They are definitely a little bit finicky, but they're definitely there. So this isn't, the August, September of earlier this year, but at the same time, if you keep your eyes open, if you risk very little, there's spaces to go. And in the space sector as well, some blasts off in ASTS, GSAT, probably the best flag recently, 20% move in a few days. And DXYZ, which is a holding company of private shares of SpaceX, including others, up, 50%, 40%. So pretty incredible move there. Lunar, the laggard of the space names, still moving as well. This is after SpaceX has that news of going public next year. So there's definitely momentum. SanDisk holding in here, the memory names holding in there today. Pretty awesome 6 days in a row for Mu. Nothing you can do there, but hopefully this goes sideways or even pulls back before earnings, because if earnings is a boost as well, it's just not viable up there. And then some of the crypto names holding up as well. Bitcoin, again, not super strong, but you know what? It was all the way down at below 90,000. So this was as low as 80,000. It's up at 93. And we're just going to have to see if it can hold there. Here's Circle as well holding in there. MicroStrategy, the main one, a little bit of a pullback for strategy. I don't want to long that. The same people who are longing that are the people who longed United Health. And it's great. It worked great until it didn't. So you saw what happened to Meta. It's been pulling back the last handful of days. It got into no man's land. You don't want to buy things in no man's land. I don't even want to buy the dips of these companies. So personally think these earnings reactions are the safest. Not all of them are following, the Guardian Health. The NVIDIA earnings reaction was sloppy, but, sometimes you just have to look away from the big companies. Amazon isn't interesting either. This earnings reaction was super messy, barely holding. And the only one that really went of the Mag 7 was Google, which is nice to have it pull back and base a little bit. And also, we'll be talking about this in a second, but Tesla holding up. So at some point you have to find an excuse to get in this, because if you've been saying day after day, well, it just went up 4 days in a row. It's like, well, the market went up 4 days in a row and then pulled back a little bit and then went up. So the bigger names are largely uninteresting, maybe with the exception of Tesla and AMD. And so I do think retail is interesting because the space names already went, and the communications names are already exposed to the upside as well. So it's hard to get exposure to those. So those are these ideas, Rio and Macy's. If you like those ideas, hit the like button. If you want a free course on how to find the next NVIDIA without gambling on startups, hit that subscribe. And if you want to see a Q&A, head over to stockscommunity.com. You can participate in that Q&A and see some testimonials as well. So, people are traveling, people are working, but when the market is hot, it can help to have a community. So someone to bounce ideas off of, check that out if that's for you.
Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.